I just wanted to come on here really briefly and just talk about mortgage discount points and if they're worth buying or if they're not worth buying. A lot of clients right now are tempted to pay discount points to lower their mortgage rate. And the fact of the matter is, depending on your situation, it is really not always a good idea. So I want to give you some tips as to why you might not want to do discount points. Really, what are discount points in a mortgage, and kind of how to sort it out. So what is a discount point? First of all, don't you love the name? The name implies that you're getting some sort of discount, but the truth of the matter is you're paying for the discount. Okay, so a discount point is a point that you pay. One mortgage point equals 1% of your loan value. So if you're buying a $400,000 house, you're putting $100,000 down, your loan value is $300,000, and 1 point equals 1% of that. So that's $3,000. You can pay a variable of that percent. So you might only pay a quarter point or a half a point or, something, three quarters of a point, something like that. You get it. That is going to correspond to a discount on your mortgage rate. Therefore, it's going to bring your mortgage rate, your monthly payment down a little bit. So what really you can think about it is a mortgage discount point is just prepaid interest to the lender. You're just paying them upfront some interest to have a lower rate for the life of the mortgage. Okay, so here's some strategies I want you to think about. Ask yourself some questions before you decide to pay points. Okay, because some lenders, they don't really care what you decide to do with your money, but you really need to know, does it really make sense to do this? Okay, so ask yourself, how long are you going to keep this mortgage? Okay, not the home, but the mortgage. And that's going to come into play because if rates come down, you're going to refinance. And I'll get into that in a second. So how long are you going to plan to keep it? If you're doing short-term investing here, don't pay points. Okay. And if you're considering refinancing soon, also probably not a good idea to pay points. The way you're going to know if it's a good idea or not is to do the math. So what you do is you take the cost of the discount points. So in the example I was talking about earlier, let's say we have a $300,000 loan amount and you're going to pay one discount point to bring your mortgage down by $100 a month. So you got $3,000. That's how much your points cost. You're saving $100 a month. So that's over one rate versus the other, right? So now we just take that $3,000 divided by $100 a month. That's 30 months that you would have to pay your mortgage in order to earn back your $3,000 that you paid up front. And then after that 30 months, you're ahead. So it makes sense. So the question you have to ask yourself is, do I keep my mortgage for 30 months, 30 plus months? Or, am I a gambler? Do I think the market is going to improve? Am I going to be refinancing? Am I going to sell? Am I going to get sick of this house? What is your situation? Ask yourself that and then decide if you're going to pay points or not. Another little tip, make sure you have the extra cash, okay? If you don't have $3,000, let's say you have $3,000, but you don't have another $3,000 for a rainy day, don't pay the points, okay? Don't give the lender any money up front that they don't need. Keep it for your rainy day fund because when you own a home, as everybody knows, things add up and they add up fast, okay? Let's see. Yeah, I guess that's about it about discount points. I wanted to just jump on here and let you know that it's not always a good idea, but it's not always a bad idea. You just have to do the math. And if you're looking for a mortgage and you want to know what's happening in the market, just give me a call or shoot me an email and we'll get to work. Take it easy.